It seemed to be falling every day in the new year. We lost about 2% today. You've heard our two gentlemen here. What do you think? What's your response now? Should we be pouring more TARP money into banks, or is it going to do more harm than good? Today was harm.
I don't think we necessarily need to pour more TARP money into banks. If the banks turn out to need it, and I don't expect they will, but if they do, it's nice to know that safety net is there. I think your first guest erred in one very important way. He said that every time the government's interfered, markets have gone down. The thing that's made the bottom in this market so far is when the government interfered to save Citibank over the weekend following the low in the stock market on Thursday, November 20th. That was a major, successful, urgently needed intervention. And the reason it was so good is because it was a real bailout, because it was so generous. As a taxpayer, I don't like that idea, but I also don't like the idea of Citibank dragging the whole world economy down with it. Now, in the new year, with a new administration coming in and a strongly Democratic-dominated Congress, we've got guys like Barney Frank who are pounding the table to use TARP to control banks, not to bail them out.
Well,
so we're seeing things like mortgage cram downs, and companies like Citibank are so weakened, instead of fighting it, they're going along with it and say, oh, yes, please, Mr. Frank, cram it down.
Well,
look, Larry, from the November 20th bottom through late in December, we had a 24% move. That's a whole bull market in 6 weeks. It's natural that we would be correcting that. At some point, you've just got to pull your socks up and buy them.
So you're okay on this story. That's what you're saying. You're not.
I'd rather see stocks up 2% than down 2% today, but down 2% makes me more interested in buying.